discussion on GST amendments which have happened. Of course, it is not part of the budget, but then the earlier council budget amendments, whatever they had. So we have CAA Saiprasad and Annapurna Kabra with us to take us through these amendments. I request our chairman to escort both the speakers onto the dais and greet them with the floral bouquet. Welcome to you, sir. Welcome to you, Annapurna. Also, one point where I would like to apologize on behalf of, because for the delay in starting the program, there were some issues with the parking and we had to give some time for everybody to come because of the road being dug up, and sorry about it. And now I request our chairman to give his welcome speech.
Respected professional colleagues, good evening and a warm welcome to everyone present here today. I am very happy to welcome you for this important session on indirect tax proposals in the Union Budget. The Union Budget is a key event of our country, and the changes in indirect tax such as GST and custom duties are especially important because these affect everyone from the businessman to common man and of course us professionals. And it's our job to make it easily understandable to the businessman, or rather implemented, and most of the time we are in the implementation stage. Today we'll discuss these proposals related to GST and how this might change the way we handle the input tax credits, e-invoicing and other important compliance matters. We will also look at the changes in custom duties and what they mean for businesses involved and their impact on the imports and exports as well. Our goal is to make that all of us in this session will understand the key amendments, and will also be able to help our clients much more effectively and communicate with them smoothly. So we are fortunate to have experts Annapurna Kabra and C.S. Saiprasad, who will share their knowledge and guide us through these technical details. Also, I would like to recognize the presence of Anand sir, who is father of Saiprasad sir, and today is apparently 40 years after his chairmanship, exactly today, sir. Welcome you all, sir. With this brief introduction, I would like to hand over to our sir. Thank you, welcome.
It's a pleasure to introduce both the speakers today. The first speaker, Anand Saiprasad, is a practicing advocate as well as a chartered accountant. He represents trade and industry body in industry before the departmental authorities, judicial forums of Sestat and High Courts of Karnataka. He has pursued and completed his post-qualification courses in DISA and also CISA from Visakha. He is also a Masters in Business Law from NLSIU, Bangalore. He is a regular faculty on indirect tax at various courses of ICI and has taught at both, and he has also been being a faculty member for the central and state tax offices across India. It's a pleasure to have you, sir. Thank you for being here. The next speaker is Annapurna D. Kabra, whom all of us know, a very popular face and personality. It's a pleasure to have her here. She is a fellow member of the Institute of Chartered Accountants, and she has been she's contributed various articles on VAT and GST, and has co-authored many books, which includes books on VAT audit, value-added tax, of course, VAT in Karnataka, technical guide of KVAT, background material of indirect tax of ICI, which was co-authored. Also discussion paper on transitional issues towards GST input credits, drafting background material for GST with which is an ICI technical guide, and also books on refund under GST and Karnataka refund under GST. She is also a faculty for the GST certification course which is conducted by ICI and member of a development of study module for Karnataka State GST officers and also a regular faculty at Fiscal Policy Institute, Bangalore. She is been co-opted as appointed as a chairperson of State Taxes and GST Committee of FKCCI, that's Federation of Karnataka Chambers of Commerce and Industry. And she has given several addresses across to the chartered accountants, tax practitioners, students and various people. And of course she is practicing in Bangalore. And Annapurna, thank you for being here and it's a pleasure having you here. With this introduction, I hand over the dais to the speakers and they will take us through this. Over to both of you.
Respected elders in the profession and my dear brother and sister members. At the outset, many thanks to the Bangalore branch for extending this invitation and granting an opportunity to Annapurna Madam and me to share our thoughts on amendments made, more with respect to GST, few with respect to customs, basically relating to indirect taxes. So, thank you. We are very aware that this is a clause-by-clause discussion, so we have kept these slides in that manner itself. I think the papers have also come out for all of you to make a note there, so we will proceed accordingly. Just before we get into the provisions per se, I'd like to take you through what the Finance Minister spoke with respect to the taxes. And it was just one para. In the entire budget speech, she has given one para for indirect taxes. And this is what she says. She says, with respect to GST, that there is a decreased tax incidence on common man. Now, my attempt in this session would be to try and probably remove the provisions threadbare for all of you and let all of you make the analysis as to whether the provisions are in line with what the FMS said, or there seems to be divergence, or it seems to be tangentially opposite. So you can make the analysis for yourself. So one, she says it's a decreased tax incidence on common man, which means the GST that you're paying per capita is reducing. And the importance there is on a common man. So let's see. Next, reduce compliance burden and logistic cost for trade and industry. There are two parts here. One is reduced compliance burden. Yes. So yeah, I can already see people nodding their heads, whichever way it is. That is the first point. And next, logistic cost for trade and industry. That is the cost of transport. She says there is a reduction of GST on the cost of transport. Next, enhanced revenues. This all of us can agree. There is an enhanced revenue. I'll take you through what the enhanced revenues are. Success of vast proportions. Success for whom? For the government, definitely. For the taxpayer, we don't know. For the professionals, I would say it's a mixed bag. Strive to further simplify and rationalize the tax structure. 2017, we're in 2024, 54th time, 54th, we are getting into the GST Council meet, and we still want to simplify and rationalize the tax structure. Okay. Next, endeavor to expand it to remaining sectors. I was quite unaware as to what sectors GST is not being taxed that it has to be enhanced to be included in those sectors. So let's look at it. Next. Just to bring in perspective to all of you, this is the tax collections. if you see, the biggest increase seems to be in terms of corporation tax. It's moved from 5.6 to 9.1. It's about, I think, some 60-63%. GST has moved from 6.0 to 9.6. In absolute terms, it's moved the greatest. In percentage terms, I think it's about 59 to 60% increase. So, about 4 years, we've seen a 60% increase in GST. Now, we come to subject proper. We're looking at the very first amendment that is there. And the very first amendment is with respect to the charging section. Can you also have a yeah. Photocopy, yeah. Right. We need to move to page number 87. In page number 87, section 110. What is added is given at 110. I have brought out the provision for all of you. And what is marked in yellow is what has been added. So if you look at the provision, it's basically with respect to charging section 9, subsection 1, the very first section. Maybe the tax called as CGST on all interstate supply of goods and services, except supply of alcoholic liquor for human consumption. That was what is there. What is now added? And undenatured extra neutral alcohol or rectified spirit used for manufacture of alcoholic liquor for human consumption. That is what is being added. Which means one another good has been added, which they are saying is not liable for GST. That is undenatured extra neutral alcohol or rectified spirit used for manufacture of alcoholic liquor. Quite technical terms there. I'll probably let Annapurna Madam give her thoughts and then I will take it from there.
Good evening all the members. Am I audible? Good evening members. Good evening members. This is a good combination we are having today. Two speakers, one is practicing chartered accountant and one is practicing advocate. I think that is a combination of GST practice which is there, and we are going to try to highlight, I think basically what Saiprasad was stating, what FM has stated on budget. In addition to that, what my reading of this budget is, I think it has extended this GST framework of whatever we are looking into by introducing lot of section. And this budget is quite a combination of, I think it's a amnesty scheme, or I can say it is a dispute resolution scheme, or waiver scheme, or closing the proceeding scheme. So there are a lot of aspects which are there in this budget. I think this is one of the most rationalized budget which I found it, and I think these all have come from, most of you are aware of this, have gone through this 53rd Council recommendation. I think out of all this Council recommendation, I think this was one of the welcome recommendation by the trade and association, because lot of suggestions, lot of recommendations have gone from trade and association, and I think from last 1 or 2 years we all were waiting for this. Am I right? So with this lot of amnesty scheme, we'll discuss in detail how is those, and but anyway, so now we are going into this clause what Sai was saying. So what I'm just trying to, is my thought, I think this was taken in 53rd Council meeting also to give an exemption, because there was a dispute between the state government and the GST government to understand whether it is leviable or whether it is leviable to GST. After introduction of GST from 1/7/2017, there was a confusion to understand whether this is forming as a part of state excise or whether it is forming as a part of state VAT or is it forming part of state GST. So I think this is the reason what I understand that this was discussed in 53rd Council meeting and 52nd council meeting in October, and then they have brought in 53rd council meeting, and I think we have to understand the background why this amendment has come. I think Sai will be taking on that background of all this judicial pronouncement and other aspect of this.
Okay, to run through quickly. Article 246, read with list 1 of the 7th schedule, their entry number 84. Central government has got the power to levy excise duty on all goods except alcoholic liquor for human consumption. Now all the goods have been removed. Now you have only tobacco and tobacco products there, and petroleum products there. So therefore, central government does not have the power to levy excise duty on manufacture of alcoholic liquor. Come to list 2. List 2 entry number 51. List 2 is state list. Under state list entry number 51, state government has got the power to levy excise duty on manufacture of alcoholic liquor. So state government has got the power. Entry number 51 is still there today on manufacture of alcoholic liquor. List 2 entry number 54 is levy of VAT. VAT on at present VAT on alcoholic liquor and petroleum products. So along with GST, now you have under entry number 51 excise duty which is charged by the state government on manufacture of alcoholic liquor. I am saying this is in addition to GST. Plus you have VAT on the sale of alcoholic liquor for human consumption under entry number 54 of the list 2. What is the problem? The problem is simply this. What was there in the charging section before? It excluded only, before I get into charging section. Along with the constitution entry number, these 2 entries, if you look at article 366 subclause 12, that is the provision which is defining GST. GST means tax on supply of all goods and services except alcoholic liquor for human consumption. So even in the constitution they say GST cannot be levied on alcoholic liquor for human consumption. What is the problem? Same thing is there under 9 subsection 1. The problem was you have alcoholic liquor. Now alcoholic liquor can be used as an industrial input. It can also be used for as a portable substance, as a food grade substance. Where it is used for industry, it is denatured. As far as denatured alcohol is concerned, absolutely no problem about it, no confusion about it. Denatured alcoholic liquor is liable only for GST 2207 at the rate of 18% and notification 1 of 70, it is liable for GST. What is the problem? Problem is with respect to this extra neutral alcohol. This extra neutral alcohol contains 95% alcohol. This ENA can be used both for manufacture of alcoholic liquor, it can also be used in pharmaceutical industries. You remember your cough syrup? They put cough syrup and then children would sleep. Alcoholic liquor. So it is used in pharmaceuticals. It is also used in beauty industry for manufacture of all your cosmetics. It is also used in as industrial inputs. A couple of other industries that I forget what it is, but 2 other industries it's again used. So the question was, what about the taxation in these aspects? Now, how did this ENA come? This ENA comes by fermenting molasses. So, if it is fermenting molasses, you have the sugar industry. After this ENA is fermented, then it goes to the alcohol industry. What did alcohol industry do? Alcohol industry said, ENA not denatured, which means it is potable. Not denatured, which means it is potable. It said, because it contains 95% alcoholic liquor, therefore it should be treated as alcoholic liquor itself and hence should not suffer GST. So the entire liquor industry were paying excise duty, state excise duty and VAT on ENA. The sugar industry, which was manufacturing this ENA from fermented molasses, they were treating this as liable for GST. And in liability for GST, entry number 453, entry wherein the goods are not specified. It is a residual entry notification 1/17, where the goods HSN is not given, then it is liable for 18%. They are paying 18% GST on it. So same product, one industry was paying GST, another industry was not paying GST. Why so? Simple as it is straightforward. End product alcoholic liquor is not liable for GST. On input, if you pay GST, you can't take credit of it. End product will become costlier. Therefore, alcoholic liquor people didn't pay GST. Molasses people who were manufacturing it and were supplying not only for alcoholic liquor but for all other industry gates also, they are saying, we don't know where it is going to go. We will charge 18%. Please take credit if you can take credit of it. Because of this confusion that was there, Himachal Pradesh government sought for an opinion from the Attorney General of India, saying, this is how it is working, you please give me opinion whether ENA is liable for GST or it is not liable for GST. The Attorney General has given a written opinion to Himachal Pradesh saying that ENA is liable for GST. All other state governments, many of the state governments took a view that that written opinion is applicable only for Himachal Pradesh. It is not applicable for our states. Similarly, Karnataka government has taken opinion from the Advocate General of Karnataka. Attorney General is the #1 advocate for India. Advocate General is the #1 state for the advocate of the state. So Karnataka government said, we will take from Advocate General of Karnataka. Advocate General of Karnataka gave his opinion. All these things were happening. In the meanwhile, it reached the Allahabad High Court in Uttar Pradesh. The Allahabad High Court in the last one, Jain Distillery Private Limited, said ENA is liable for GST. ENA is liable for GST. So now you had a court decision also which said that ENA is liable for GST. Because you had all these problems, therefore the GST Council thought of it and has inserted this. In the backdrop of what I have given you, now see how each and every word is important. What is not liable? Alcohol liquor for human consumption. What is also not liable? Undenatured. Because denatured we have no problem only. Right at the beginning I said denatured means liable. Undenatured, extra neutral alcohol or rectified spirit used for manufacture of alcoholic liquor. So, where this undenatured ENA is used for manufacture of alcoholic liquor, it is not liable. Where it is not used for alcoholic liquor for human consumption, but it is used for industrial inputs, it becomes liable for GST. You understood if the catch in that word, you simply can't say like alcoholic liquor is outside. No. ENA liability, please tell me there is liable for GST or not. Please answer. You have to say, I can't answer. You please tell for what are you using it. Its end product is for manufacture alcoholic liquor or for industrial use. Industrial use, pay GST, alcoholic liquor, not. That is the story. I want to end the story by what Winston Churchill said. Winston Churchill said, alcohol has, sorry, I got it wrong. Winston Churchill said, I have taken more out of alcohol than what alcohol has taken out of me. You know why that is apt over here? Because both the central government and state government are trying to take money out of this alcohol. They are fighting. This is the way they have come up. Okay. Next one. Okay. The next amendment is you can actually come to section 112.
Saiprasad, I think before looking into that, they have added rectified spirit also.
Yeah.
So is there any specific reason for
Yeah.
that?
The meaning of rectified spirit is where the alcohol can be used for consumption on distillation. What happens in the distilleries? Distillation. So where that alcoholic liquor can be used as, that ENA can be used for alcoholic liquor for human consumption, but on distillation. Before distillation, it is called as, what is it? Rectified spirit. So therefore, rectified spirit, when it is used in the distillery for manufacture of alcoholic liquor, will not be liable for GST. Rectified spirit, when it is not used for manufacture of alcoholic liquor, but used for industry, it will be liable for GST. Okay. Right.
So, if you have any doubt in that clause, you can raise it immediately, or else we proceed with the next clause. So next clause
If
is
you already have
exhaustive.
no. What do you call that after alcohol? What do you call that? Hangover. I don't know whether, at least I had a hangover studying, researching for this. So, right.
Yeah.
But
How would a trader decide, ma'am?
how did
To whom he is selling?
sir?
If I am dealer of
Ha.
denatured ENA,
Ha.
how do I know that he will use it for manufacture of alcoholic liquor or he will use it for anything else? Should I take a declaration based on which I should charge or not charge?
Generally, what
It
happens?
is liability as only.
Good point. Generally, what happens is the distilleries directly purchase. When distilleries directly purchase, they know it is going for manufacture of alcoholic liquor.
The knowing is
That time they will not charge. That time they will not charge. Where it is not coming for distilleries, you don't know where it is going. So in those cases you have to charge. The way the industry is working, what I understand, for all distilleries they directly procure it. There is no supply chain to the best of my knowledge. It is a direct purchase for distilleries. Apart from distilleries, it is industrial units. That is my what I have researched about this.
And what about past periods? What has happened so far?
Ha.
I think
Next section.
we are having the next section on that.
No, for this also
Yeah.
they haven't specifically mentioned that as is where is basis it will be done. Right?
This is my next section.
It is there.
Okay.
Just
You want to take it forward?
Yeah, I'll just take that respective part and then. Next clause is 111, not much changes. It's relating to this composition scheme which is pertaining to 10 subsection 5 which relates to the composition dealer if he is not satisfying all the conditions of this composition scheme. Then there can be adjudication proceedings under 73 and 74. So now they have made an amendment by inserting 74A, which is a new adjudication section which we will be discussing later. But just to complete this clause, we just want to say that it is not only including 73, 74, it also includes 74A to do the adjudication proceedings from 1/4/2024. So I think not much changes except inserting a section 74A. Now,
At one point there, ma'am.
yeah.
Request members is there are many sections where the demand provisions are there. Wherein previously demand was there under 73 and 74. Now a new demand provision has been inserted saying 74A. Wherever those provisions are there, they have given you this, we will skip those
Yeah.
provisions. Because it's only saying before notice was under 73, 74, now notice will be under 74 capital A.
Yes.
We discussed 74 capital A. Yes. Okay.
Now the very important section clause is clause 112, which says that after section 11 of the CGST Act, the following sections are being inserted. I just read upon and give my thought, and then Saiprasad will take it forward. I request all the members to just go to that point. See, basically the section heading says that power not to recover GST, not levied or short levied, as a result of general practice. So it states that notwithstanding anything contained in the Act, so it begins with the non-obstance clause. If the government is satisfied that a practice was or is generally prevalent regarding the levy of GST, including non-levy thereof, on any supply of goods or services or both, and such supplies were or are liable to central tax in cases where according to the said practice central tax was not or is not being levied, or a higher amount of central tax that was or being levied in accordance with the said practice. So in brief, I can say that it covers those supplies where it is non-leviable or it is short leviable. So it is not covering the excess leviable. That is the one aspect. And the second aspect, it says that the government may, on the recommendation of the council, by notification in the official gazette, direct that whole of the central tax payable on such supplies. It is talking specifically, it is not a part, it is saying whole of the central tax payable on such supplies, as the case may be, the central tax in excess of that payable on such supplies, but for the said practice shall not be required to be paid in respect of supplies on which the central tax was not or is not being levied, or was or is being short levied in accordance with the said practice. So basically it is allowing you to waive the recovery of the central tax which is not levied or short levied due to general practice. It is also, so we have to understand what kind of industries are covered, like we were discussing on ENA, whether it is covering as-is basis, whether it is covering, what I can say, I think we have to wait and understand, because we had a similar section 11C under the central excise which was challenged at the higher court. And the second important aspect, we have to understand that this is, the waiver is given via supply based and it is not a supplier based. So it is, this waiver is given on a supply based. So I think we have to understand what is the general practice. Is it something, can we cover this online game industry, I think, which is going around? So can we think of that, or is there any other industry which are able to understand, or as-is basis is covered, or ENA is covered, or any other thought process we can have on this actually?
Yeah. Like ma'am said, this is not a new provision for persons dealing in indirect taxes. You have, like she said, 11 capital C of the Central Excise Act and section 28 capital A of the Customs Act, which was saying that where excise duty or custom duty was payable but has not been paid. Similarly, where GST is payable but has not been paid, or where excise duty custom duty was payable at a lower rate, has been paid at a lower rate but was payable at a higher rate. Similarly, where GST has been paid at a lower rate but GST was payable at a higher rate. Then in all those cases they are saying the central government has to, on the recommendation of the council, the central government will then have to give an order. Government may, on the recommendation of this one, direct that the whole central tax payable, as the case will be, excess payable shall not be required to be paid in accordance with the said practice. Okay, so therefore an order is generally issued in excise and customs. Similarly, an order will have to be issued in the case of GST. First they discuss in the GST council and then the order comes. Only pursuant to order, tax is not payable. What is happening in GST now? Are similar issues there in GST now? 100% yes. I'm just having a look at the various circulars. The first circular is unfried and uncooked snack pellets. Second one is rub other than packaged and labeled. Something relating to electrical vehicles. Taxability with respect to security lending schemes. Fabrics, something related to fabrics.
Sir, I think it is not getting connected.
Yeah.
Just trying to change the slide.
There on the slide, I'm just looking at the. No problem, I don't have it on the slide. I'm reading it from this one. So therefore, there are many circulars which have already been issued, wherein they have said the issue for the past period is hereby regularized on an as-is basis, as-is various basis. So therefore, what was the government doing up till now? Not the government, the department, CBIC would issue a circular and state that for the prior periods tax would not be payable. It is regularized on a as-is various basis. Frankly speaking, they didn't have the power. It was a trade convenience circular, so we took the benefit of it and we went forward. But if anyone challenged it from the department, then it would not stand the test of law. Therefore,
just to interrupt, you have to understand what is this as-is basis. I think if we can, basically in as-is basis, whatever is the position on that day, will hold good. Like if you have already paid the taxes on those transactions, then you cannot claim the refund. If you have not paid the taxes, then there is no levy of taxes. So as is basis is the stand which was taken on the date of issue of circular. So I think that.
Yes. So therefore,
Sai, but I have one thing here. See, we have a section 168 which has given a power to come out with the circular and have given lot of waiver for lot of products by saying as is basis, like for past year you need not pay any taxes, but from future period you are liable to pay the taxes. Whether those as is basis is covered in 11A or is it taking the power under 168? Because I am trying to understand that this is only applicable where it is a general practice. So can we cover those scenarios too?
no, it will not be covered. What is covered under 11 capital A is quite small in its applicability. First, recommendations of the GST Council has to state for what products or for what services GST was payable but was not being paid by the trade, and then the GST Council has to state that even though there is a non-levy, we are not going to recover. So until unless those points come as a part of the minutes of the GST Council, do not.
Like for example, like we had for this hostel, I think most of you would have read that circular which has given a as is basis till 14 July 2024 from 1/7/2017 to 14 July 2024, saying that even if those hostels have paid the GST, then it is going to take a color of as is basis, so they cannot claim the refund what they have paid. But if they are not paid, they are not leviable for GST from 1 July 2017 to 14 July 2000. So where is that power which they got it actually? So I think that is what we can.
That's what they didn't have the power.
Yeah.
They're issuing by way of a circular.
Yeah.
That's why if you look at under 11 capital A, on the recommendation of the council, now the government by way of a notification. Or if you understand the difference between circular and notification, no? Circular is a clarification issued by CBIC. Notification, the central government has the power to increase the tax, decrease the tax under whatever sections those case may be. So under 11 capital A, the power is being vested with the central government to issue a notification to not collect. In the absence of which it will become collectible. Okay?
I think in this case it is because of the general practice only and not because of any amendments.
Correct. It is because of general practice and not because of amendments.
Yeah, so that's why I feel that denatured alcohol may not come under this.
It will not come.
Because it is not because of any practice.
It is because of a practice, that is, it's more because of an interpretation. Some of them have practiced not paying, some of them have practiced paying. It is not going to come under 11A because up till now a notification has not been issued. It is decided under the GST Council, but until unless a notification is issued saying that this ENA, which is classifiable under entry number 453 of Schedule 3 of List 1 of Notification 1/17, there can be a non-recovery of these taxes unless the notification, this is how the notifications came before, unless such a notification is issued, it will not get done. Okay, we'll proceed further?
Yes.
Right. Time of supply, section 13, subsection 3. Okay, what have they done? They have added the words by the supplier in case where it was required submitted. So forget this, look at the PPT. Where has it been added? Okay, what is section 13? Section 13 is with respect to time of supply. Subsection 3 is with respect to what? Reverse charge. Under reverse charge, what was there before? It was the date of payment as entered in books of accounts. Second one, the date immediately following 60 days from the date of issue of notice, issue of invoice or other documents, whatever name called, by the supplier. It stopped there. Now what have they said? By the supplier, in case where invoice is required to be issued by a supplier. So what are the cases where invoice is required to be issued by supplier, though tax is payable under reverse charge by the recipient and not by supplier? That is point number 1. Point number 2, clause C says the date of issue of invoice by the recipient. Clause B was by supplier. Clause C is invoice by recipient in cases where invoice is to be issued by the recipient. So this is the amendment. You want to take it forward?
Yeah, I think basically this has come to give a benefit to the reverse charge payments actually. Because I think this we can read along with that 31 so that we can try to. I request the members to read clause 113 and also this clause 118 also so that we can cover little practical aspect here. Because clause 118 pertains to this section 31 which is pertaining to the issue of invoice. Where it is stated, I think I will just try to give the background of this. I'll just try to read out so that we are very clear on that aspect. It says that in subsection 3 of clause F, after the words and figure of section 9, the words within the period as may be prescribed. I think that has been amended in section 31(3)(f). So the background of this is 31(3)(f) is applicable in case of issue of invoice by the recipient when they are liable to pay under reverse charge under section 9 subsection 3 or under section 9 subsection 4 where the supplier is not registered under the GST law. So the issue what I think from last 6-7 years we are having that if we are liable to pay the reverse charge payment, the issue what we were getting is the credit availment. Because there was no time of supply which was defined in such scenarios, so I think they have added this time of supply under section 13. That is the one aspect. And the second aspect they are just trying to bring here is they have added within the period as may be prescribed. So what is the period as may be prescribed? I think that we can borrow from section 13. What has been prescribed for time of supply for issue of invoice. And the time of supply is pertaining to the liability to make a payment. So if they are going to issue the, I just give an example to a better understanding. For example, there was a GTA which I was liable for the year say 2021. During the adjudication, I was able to understand that yes, there is a levy of reverse charge which was not offered in the respective financial year. The issue is whether the time I would have already paid the reverse charge, but today if I look into the section 16 subsection 4, the time limit to avail the credit has been elapsed. So now the issue is when I am going to raise this self-invoice, if I am going to raise this self-invoice within this time prescribed, then I can take the benefit of this credit under section 16(4) based on the circular issued, and if there is a delay in paying the taxes, you have to make a payment along with the interest and penalty as the case may be. Now the issue is, we have to understand why this within the period has been prescribed. Is it to remove that hassle or is it to give some additional benefit? I think we have to try to understand this.
Okay. Just to add on to what ma'am has said, I am now under section 31 subsection 3. What is section 31 subsection 3 saying? It is saying who must issue the invoice. What are they saying over here? In this case, the invoice has to be issued by the recipient. What has been added? Within the period as may be prescribed. Once they say prescribed, it's defined in the section 2. Prescribed means prescribed as per the rules. So therefore, we now have to wait for the rules, in my understanding, as to what is the period. The rules will say this is the period. Whatever period the rules will stay, it will be within that period. Understood this point? There was no period prescribed for issuing invoice where the invoice has to be issued by the recipient. What are the cases where the recipient must issue invoice? I have a subsidiary company in India, holding company is there outside India. I am getting services from a holding company. Holding company is not liable for registration in GST, no? It's outside India. Is it liable for registration in for GST? It's not liable. So will it issue a tax invoice? It will not issue a tax invoice. So if it is not a registered person, in case of import of services, who must raise invoice? I must raise invoice now. So as recipient, I must raise invoice. Where is the provision which says I must raise invoice? This. It did not say any period. Now they have said within a period as may be prescribed. Now read this back with time of supply. This is the provision for time of supply. for a second, look at the provision without the amendment. That is, look at the provision without subclause C. Before, without subclause C, what was it? It was earlier. If you look at the starting, time of supply shall be earlier of the following. What is it? 1, date of payment. 2, date immediately following 60 days, where the invoice is required to be issued by the supplier. So therefore, what would have happened is date of payment in as entered in books of accounts or the recipient, or the date when the payment is debited in bank account. So under that clause, this would get attracted. What happened is, all of you are aware that you got a circular which stated that the time of supply in case where the recipient is required to issue the invoice shall be the year in which the invoice is issued. Circular number, madam? 211. So, what was happening in all these cases? Basically, this was mainly towards import of services, wherein they had not paid the tax on import of services. When notices were issued to them, they were ready to pay the taxes on import of services, but they were unable to avail the credit of the taxes paid because the time limit had already expired under 16 subsection 4. So, first the board came out with a ingenious way of allowing the credit. Thereafter, the government said, don't worry, we'll make changes in the provision itself. What is the changes now they have made? Now what provision they have made is, they have now bifurcated between cases where supplier is required to issue invoice in case of RCM, cases where the recipient himself is required to issue invoice in case of RCM. What is the case where the supplier will issue invoice in case of RCM?
We have GTAs for both.
GTA is a very good example where supplier is going to issue invoice. For example, if the GTA is under 12%, then the GTA himself is going to issue invoice. Further, if a person is registered and is providing services under reverse charge method, in those cases he will still issue an invoice. Take an example of an advocate. Services by an advocate is entirely on RCM, but say I am getting rental services. I am also getting rental income. If I am getting rental income, then if my turnover is greater than, aggregate turnover is greater than 20 lakh, I have to register myself. Yes or no?
Yes.
Now, for rental income, I will charge GST in the invoice. No issue about it. Now, for my legal services, because I am a registered person, I will still have to issue an invoice. Understood this point? As against this, take an advocate who does not have any other income. Only legal services. Is he required to be registered? No, he is not required to be registered. If he is not required to be registered, will he issue a tax invoice? In GST I am saying, in terms for GST under 31, no, he will not issue. In that case, who has to raise a document for paying, taking credit of GST? The recipient himself has to take. So, in clause C, what they said, the date of issue of invoice by the recipient in case where invoice is required to be issued by recipient. Date of issue of invoice by recipient. Look at the time of supply. I have provided the service in 1718. I have provided legal services in 1718. Recipient has raised the self-invoice in 24-25. You got what he said? According to this very simple point, but time of supply, place of supply, are all 2017-18, we are all masters in that, or at least supposed to be masters. Simple point about 17-18 I have issued invoice. Okay. He has paid to me also in 17-18. No, not paid, sorry. Paid, then will get covered before. I have issued invoice in 17-18, he has not paid. 24-25 he makes the payment to me. At the time of making the payment, he raises the invoice in 24-25. What is the time of supply in that case? amongst us, we were wondering it will get closed at very fast. The way we are going, 8 o'clock closing is difficult. So fast. What is the time of supply? It says the date of issue of invoice by the recipient. He has issued invoice under 24-25. So time of supply is 24-25. Which means he will pay in 24-25, take credit in 24-25. For services rendered in 17-18. If this provision was not there, department would have asked him to pay tax under 17-18, asked him to pay interest also, and then said, I'll not give you credit. Understood? That's all this provision. Next.
Saiprasad, one of the practical issues I think most of us are facing today is we would have paid this reverse charge tax through DRC3 during our adjudication. So can we raise now self-invoice and can we take the credit because we have lost the credit? We have made a payment as a liability in few of our notices. So how can we raise the invoice now and take the benefit of 16.4? Or is it something, because most of us would have paid our RCM tax on this, especially this royalty case and many other cases. So what is your view on that?
She is asking a question, it doesn't mean she doesn't know the answer. It's just that she wants me to give the answer. Anyways, for you to take credit, and she'll check whether it's right or wrong. And then if it's wrong, she'll not answer. So, for you to take credit, it must come in 3B. Yes or no? If you have already paid in DRC 03, has it come in 3B? If it is not come in 3B, can we now take that in 3B? In my view, it can be taken, and so the credit is not available. You agree?
Yeah, I think because we have to wait within the prescribed period, I think based on that rules we have to decide. That is the one aspect. But I think the benefit should be given for those taxpayers who are paid under RCM. Though there is so for that respective year, at least that benefit of credit should be given. That is my view. Strictly speaking, there is no clarification on this. But one aspect I thought we have to look into this. It got rejected even based on 16 subsection 4. So now let us see whether this 16 subsection 5 will take care of that. Yes. So I think going with that question.
Speaking, 16 subsection 2, all the 4 conditions are satisfied. 5 conditions are satisfied.
Yes.
The document to take credit is now coming in the form of
Correct.
my discounts.
Yes.
You want to say that I am now going to take the credit? Yes.
I think that amendment should be brought in the interest of trade and commerce.
Fair.
Yes.
Next, limitation period to take credit.
Yes, very important.
Which version are we now talking about? So we are now talking about section 114.
Clause 114 actually. Any issue in between, like before we initiate on 114, anything on this 113 and this, any issue on this RCM taxes? Anybody wants to add something on this? Yes.
So till now, no time limit is prescribed for the raising the self-invoice unless and until a notification comes. Whenever the recipient raises the invoice, that will be the time as of now.
Because 39 says after 30th of
Yes.
October you can't raise any invoice
Correct.
in the previous period. Time limit was there, not under this section but under section
Other
39.
section actually, yes.
Time limit was there. It was under section 37,
Yes.
wherein for you to upload your invoices
Invoices.
is there. Okay, now come to the next point. You want to take it forward?
I'll add up in a brief, then I think you can take on this. I think this is one of the most awaited amendment, I think, scheme I can say. I mean, should we call this as an amnesty scheme or a waiver scheme or dispute resolution scheme? I think you can think on that. The only question what I had is, we'll just go through this clause 114, 16 subsection 5, which states that notwithstanding anything contained in subsection 4, section 16 subsection 4 pertains to the time limit to avail the credit. So, notwithstanding anything contained in subsection 4, in respect of an invoice or debit note for supply of goods or services or both pertaining to the financial year 17-18, 18-19, 19-20 and 20-21, the registered person shall be entitled to take input tax credit in any return under section 39 which is filed up to 30th day of November 2021. there are two issues which was revolving around whether for the financial year 17-18, whether it should be taken up to November 18 or is it up to November 21. I think there was a lot of issues going on based on this judgment which we were discussing on that end trade link, which has given that you can take the credit only up to November. But I think this is more extensive benefit which is giving you the benefit that if you have filed your 3B up to November 2021 from the financial year 17-18, you are entitled to take a benefit of this input tax credit. So I think this is one of the amendment which I am just looking into that. But only my doubt before going into this, why they have added as a separate section, why they have not made it as a proviso itself to 16 subsection 4. So I think you can take.
Section 16 gives the conditions subject to which credit can be taken. 16 subsection 4 stated that, or 16 subsection 4 provided a limitation period after which credit will lapse. 16.4 stated you have to take credit before the due date for filing return for September of the end of the financial year. That is, assume it is 21-22, September 22 return, due date that is 20th of October, you have to take credit. If you don't take credit, the credit will lapse. 16.4 got amended. Wait, which finance act? 16.4 got amended by 16.4 got amended by Finance Act 21, wherein they removed the word due date for September and they brought in the word November 30th. So now the provision reads, if it is 24-25, it is not 20th October, due date for September, but 30th November. What happened was, many cases were there all across India challenging the limitation period under 16.4. None of them succeeded. However, in Kerala High Court, what happened was, they said, fair enough, 16.4 limitation period, constitutionality, you can provide limitation period. If I don't take credit, it will get lapsed. High Court said, the provision is okay. However, the amendment which they brought in by Finance Act 21, stating that the 23, yeah?
Yeah, debit note was 21, this is 21.
Okay, I'm sorry. The amendment for November 30 was Finance Act 23. So this amendment, it was argued because it is a procedural provision, therefore it has a retrospective effect. Kerala High Court said, correct, because it is procedural, I will give retrospective effect. So for the amendment which they made in 23, which the finance bill never said was retrospective, the Kerala High Court made it retrospective and said, for 70, starting from 17-18, take this benefit. That is, for all the years from 17-18, it said 17-18, of course, for 17-18, it was 1 year full was there, but if you read 17-18, it said 30th November 18, 18-19, it said 30th November 19, 19-20, 30th November 20. It said like that. Respective year, November 30th. That is what the Kerala High Court said. That is how the provision is also there. Understood this much?
Yes.
Now read what provision they are saying. They did not say November 30th of the respective year. They said for all the years. 17, 18, 18, 19, 19, 20, 20, 21. If you have taken before 30th day of November 21. So even for 17, 18, 30th November 21. 18, 19, 30th November 21. The judge said something. I am very circumspect in saying that the bureaucracy or they have made a mistake in drafting. No. Definitely they have not made a mistake in drafting. They seem to have specifically allowed. Why it is November 21, not November 22? Why it is November 21, not November 20 is a moot point that I don't know. But up till November 21, they have allowed it, which means 1780, if any of you have filed return for 17-18 in November 21, you will get credit. Look at the way this provision is done. It is not something which we can act upon. But if you have litigated the matter before, or even though there was a delay in filing return, if you have filed returns, that very narrow class of people get covered here. Understood this particular point? So it is not even affecting the current periods, it's affecting only the previous periods, and for the previous periods, further you must have filed before November 21. If they give it in November 21, they could have given from November 20 to November 23 also.
Yes.
So why 21? Okay. So this is, yeah, you can take it forward now.
Yeah, one more issue which we are having is like if you have already paid the taxes under 16.4 as a liability, because now this amendment has come under 16 subsection 5, can you ask for the refund of the taxes which are paid under 16 subsection 4?
We just finish subsection 6, then we'll take the provision.
Refund of that taxes, okay.
We have a specific provision
Yeah,
for that.
I think 16.4 is taking, 16.5 was done.
Okay, 5 is done, now next 16 subsection 6. Yeah.
So you want me to, yes. So I think we can refer page number 89, subsection 6, which states that where registration of a registered person is cancelled under section 29 and subsequently the cancellation of registration is revoked by any order either under section 30 or pursuant to any order made by appellate authority or an appellate tribunal or court, and where availment of ITC in respect of an invoice or debit note was not restricted under section 16.4 on the date of order of cancellation of registration, the said person shall be entitled to take the input tax credit in respect of such invoice or debit note for supply of goods or services or both in a return under section 39 filed up to 30th day of November following the financial year to which such invoice or debit note pertains, or furnishing of the relevant annual return whichever is earlier, or for the period from the date of cancellation of registration or the effective date of cancellation of registration as the case may be, till the date of order of revocation of cancellation of registration, where such returns are filed within 30 days from the date of order of revocation of cancellation of registration, whichever is later. So only one thing, I think it is little self-explanatory, but still it is covering the cases where your registration is cancelled and again it is revoked, and if you have based on the order of the higher authority or based on your revocation of this registration, the issue was pertaining to this availment of input tax credit.
Take a case of cancellation of revocation for the period, say 2021. Cancellation can happen retrospectively also. So assume it is cancelled with effect from 1st April 20. When is this order, DRC 17? This notice for cancellation? REG 17. This notice for cancellation for registration from 2021 has come in today's date. 1st August 24, they have retrospectively cancelled. 2021, 21, 22, 23, 24, up till this date you would have taken credit also. Okay. Now, registration got cancelled, adjudicating authority we went and represented. He confirmed the cancellation in REG 19. REG 19, he has confirmed the cancellation of the order. Now we go to First Appellate Authority. First Appellate Authority also has considered adjudicating authority, and he has said adjudicating authority is proper in cancelling the order. After this, what to do? Tribunal is not there. I need to work. I will go to High Court. High Court, writ petition, admission. After admission, another 4 or 5 months, daily going and asking, and then it will come on board. It will take some 2-3 years. So if you have filed in August 24, assume the High Court allows revocation of cancellation in 26. 2 years, by the way, is very short period, I'm telling you. You're not going to get relief so fast in the High Court. 2 years is like this. So you got revocation of cancellation in 26. What happened for the credit between 24 and 26? 21 till August 24 I have filed returns, I will get the credit back. What happened for the business that I have done from 24 to 26? As a trader I have purchased and I have sold. They are not going to give away output tax they'll ask me to pay. As far as input tax credit is concerned, for 24, 25 they will say 16/4, 30th November 25 is last date, limitation period. Just now we discussed limitation period 16/4, it is 30th November of subsequent year. So 24, 25, what is the last day to take credit? 30th November 25. 25, 26, what is the last day to take credit? 30th November 26. Assume I got my order on 1st of January 27. They will say, very good, please come. I'll give you registration. I'll give you registration very fast. Please pay output tax. Sir, input tax. You see 16/4. Time limit lapse 24, 25. Sorry, I can't give credit. Can you do business like this? Business they have stopped. So many people have stopped doing business. They are doing business in another name now. Just come out naturally, unfortunately. Okay, whatever. So therefore, this was a genuine ground that was being raised, saying that in case of revocation of cancellation, you will ask the output tax, but as far as input tax credit is concerned, we are not allowed to take credit because 64 is coming in the way. That is why 16 subsection 6. Now, look at the time limit. What they have given? They have given 2 time limits. The subclause 1 time limit is 30th November or annual return, whichever is earlier. Why they brought in 30th November annual return, whichever is earlier? Because assume I have got the revocation of cancellation for the financial year 24-25. I have got the revocation of cancellation order in July. Revocation of cancellation 24-25, I got it in July. Then you will be time till November or annual return, whichever is earlier. So I have time at least till November 30th. Look at the other case where the revocation of cancellation is not for 24-25, revocation of cancellation is for 21-22. If the revocation of cancellation is for 21-22, I don't fall under clause 1. Annual 30th November is also over, annual return is also over. Look at clause 2. It says within 3 months, within 30 days from the day the order of revocation of cancellation. I have got the revocation order in July. 30 days from July 24. That is 30th August 24. I have to file return for 21-22. I will get the credit. Understood or not? First clause is for the current financial year. Second clause will be for the old financial years because it says 30 days from order for revocation. Understood this clause? Huh? Okay. Now, just come back. It says section 114. They are doing amendment of section 16, but if you look at it, it is section 114 of Finance Act Finance Bill 2024. You looked at 114 there?
Now, go to section, I think 146, I think. That is the last amending provision.
146.
146, huh?
Yes.
Please go to 146. Also, you got page number 101. You went to 146. Shall I read? Shall I read? No refund shall be made of all tax paid or ITC reversed which would not have been so paid or not reversed had 114 been in force at all material times. Can someone of you answer? Because up till yesterday when both of us were discussing, we didn't get the answer for this. It is talking of section 114. So section 114 is what we just discussed now. 16.5 and 16 subsection 6. For paucity of time, if you get it easily, please answer. It says no refund shall be made of all tax paid We are talking of taking of ITC, no? 16.5 is taking ITC for 1780 to 2021. 16.6 is taking ITC in case of revocation of cancellation. Where is the question of tax paid? So it says, no refund shall be made of all tax paid or ITC reversed. Where is the question of ITC reversed? It is actually taking ITC. Yes or no? Or ITC reversed, which would not have been so paid or not have been reversed had 140 not been in force. Anyone?
No,
Okay.
on account of any demand made, if they had reversed the ITC, what they have taken.
I can't take ITC in the first case because it is cancelled no during that time.
No. It is in respect of 16.5.
Okay.
So in 16.5, now they have given the relaxation to claim till 30th November 21.
Okay.
But in case for the past periods, I have already taken the credit and department has asked me to reverse it or pay it back in form of a notice under 73 or 74. Then in those cases, you cannot ask for a refund back just because this provision is there now.
Good point. Also, you got what she said. Wow, I had not thought of that. I had thought of a different answer and come. Okay. What she said, she said for the subsection 5, 1780 to 2021, I have now reversed I have taken the ITC because I have taken ITC by filing belated returns. I have filed it beyond 16.4, I have taken ITC. Okay? Department has now said you have filed belated returns, so therefore you have to reverse the credit. I have reversed the credit also. Now because this provision has come, you can't go back to the department and say, whatever I reversed, give it back. Good point. I never thought of it like that. Okay. Others? Excellent. Others, someone else have any view on this? Yes, sir. Same thing. Okay. What came to my mind is, shall be made of all taxes paid. All taxes paid means, during the period of cancellation, what they will do is, not only will they cancel your registration, they will also ask you to pay the taxes till the date of cancellation. That taxes you would have paid. Okay? Now, once you have got the registration now, you will now say, please allow me to get the taxes back, because if I adjust the ITC, the tax is no longer payable. Second, reverse ITC. Who would have reversed ITC? Not the person whose registration has been cancelled. All the recipients who have taken ITC from the person whose registration has been cancelled, their ITC also is being reversed. Are you getting notices like that? I am the GST person whose registration has been cancelled. I have made supplies to all of you. All of you have taken credit. Because my registration is cancelled, notice will be issued to all of you to reverse ITC because my registration is cancelled. All of you would have reversed ITC. Now, there is revocation of cancellation. Because of revocation of cancellation, now I am able to take credit. That time, when all of you who have reversed, all of you will say, I have reversed, please come, give me the money back. Government can't do it because there are so many thousands of notices which would have gone across India. Government will have no control over it. That is why section 146. Look at the way, look at how tight a train they are running. Train or bus or whatever it is. How tight a house they are running. They are not going to let one paisa out which, this way or that way. Okay, ma'am, this is over. Next.
I think
But they can re-avail that credit, right?
Huh?
In that chain of transaction, why is that I cannot re-avail the credit?
You can you can avail the credit, but you would have reversed, no?
I have reversed because my supplier got notice, or that the entire chain would have reversed because their respective officers would have said his registration is cancelled, so you
Yes.
will not get credit. You reverse in
Yes.
the chain. Now, let's say after 4 years, 5 years under appeal, he's got a favorable order. His registration is restored. Correct? This entire chain should be again re-eligible to claim that.
It should be.
This issue is there actually. Reclaim is missing in that actually.
Yeah.
So reclaim, re-avail rather.
Yeah.
Oh, okay. You are saying it is. Oh, you are saying it is going to come under reclaim. But what is there over here is re-avail.
Yeah, but if you see the rules for the reclaim,
Put as credit reversed.
yeah,
So I would have reversed.
Reversed.
I will claim back.
the issue
That
is,
restriction is not there.
yeah, I think that is missing. But if you read the rule, Saiprasad,
Yeah.
reclaim is specifically used only in the scenario where there is delay in payment of that 180 days
Yes.
and again you can
Rule
reclaim
37 and
it.
37.
Yeah, 37 and 37A, I think that terminology is used only in those rules.
Correct, ma'am.
So I think they would have referred at least to that aspect in this. So
It's
that
not
is
referred,
missing.
but it's a valid point.
Yeah,
I think we need to get a representation.
yeah, I think recommendation has already been made on this aspect.
But I think 73 or 74 has an explanation also that if the primary
Proceedings.
person
Yeah.
is draw
Main person.
Against all others,
all the
yes.
other
Yeah,
persons
main
are-
person drops and the other person. It's
Right.
finished.
That will not apply because I am the company. I have not paid the GST.
Agreed.
I am the main person. The other person says notice will be issued on the directors. On the general manager saying you are the person responsible for the company to have paid the taxes. You have not paid. Company has not paid. Therefore, all of you are liable for penalty. Notice will be issued to director and saying that you are liable for penalty only. I am liable for tax, interest, penalty, everything. Finally, my case is decided saying that it's export of service. So tax is not payable. So once main person tax is not payable, penalty notice against them will go. That is all that explanation is saying in my view. Just have a look at it. Explanation 1 to section 74.
Correct.
Yeah.
Whether ITC will come there, just have a look at it and let me know.
So I think we should have a break of 10 minutes.
I was thinking I'm very slow.
Yeah, no, actually we have a lot of relevant aspect in 74A, 128A, lot of things we have yet to discuss, but
That is okay, ma.
yeah, that's why he was requesting for 5. Can we have a break of 10 minutes and then, because there are a lot of things to be discussed on the other
Okay.
clauses.
I am at slide number 12 or 48. So we'll do one thing. 8 o'clock, as this train is basis, we will stop. If it is okay with all of you.
Yeah, we'll extend. No issue. Anyway, we have long weekend, so we can work on it, right?
In accordance with the provisions of 74, 129, 130. That is, due to fraud, suppression, misstatement, if notice is issued and you have paid the tax, that corresponding credit would not be available to you. Sorry, madam. That will without your permission. So therefore, if a show cause notice is issued in 74 and that person pays the tax, can I take ITC of that tax paid by such a supplier? I can't take credit. What is 129? 129 is detention, 130 is confiscation. Before under 129 tax was there, therefore 129 was there. Afterwards amendment 129, 20% penalty. 130 confiscation, fine in lieu of confiscation. You have also tax paid there, where tax has not been paid, and 130 tax also is payable. Look at what they have amended. They have removed 74, 129, 130. They have said any tax paid with in accordance with the provisions of section 74 in respect of period up to financial year 23-24. Which means what? They have removed 129 and 130. So going forward, under 129, that is as of today, from the day the finance bill is going to come, are we going to pay any taxes under 129? No, we are going to pay only 200% penalty. Are we going to pay any penalty, tax under 130? No. Before tax was payable, after the amendment, no tax is payable, now only fine in lieu of confiscation is payable under 130. So therefore, only section 74 is there, that is fine. I still remember this very nicely. My father would say that, he's actually sitting here, but he would actually say, look at what is there, look at also what is not there.
I used to think what is there to look at only is difficult. What is not there towards you, and then look, sorry, I don't have that much of capability. But just look at this. Only 74 was brought in. They have not brought in 74 capital A. Two kinds of notices are issued. One is fraud suppression misstatement under 73. Sorry, fraud suppression misstatement under 74. Other than fraud suppression misstatement under 73. That is inadvertent non-payment. If it is fraud suppression misstatement notice, credit I will not get. If it is notice issued under 73, I would have got that credit. Now, these two sections have ended for financial year 24-25. So therefore, up till financial, 23-24, up till, that is why they have brought this point. Going forward from 24-25, notices will be issued under 74 capital A. When notice is issued under 74 capital A, also it will have two cases. One, fraud suppression misstatement, other than fraud suppression misstatement. In case of other than fraud suppression misstatement, we have to get credit, we will get credit. Fraud suppression misstatement cases also, now in my understanding, we will get credit because it is 74A is not there yet. That is my understanding. Okay. Next. Sorry, madam.
Just one point to add here. This 129 and 130 was redundant from 2021 itself. So I think it was a dummy section which was there. So that is one point. So I think other sections, section 21 relating to recovery of this credit for input service distributor, I think only 74A is added. Then clause 117, I think it is just added a revocation of cancellation. I think that we can refer as of now.
Because rules have to be brought in, not much of an issue there.
Yes. So now we will come back.
31 3F you have spoken of.
Yes.
Time of supply 13 3 and 31 3F you have spoken together.
Yes.
Next is
119 also is 74A. So I think we can go to section clause 120.
39.
Yeah, section 39.
Section 120 TDS return.
Yeah, so I'll just read and I think you can just take on those issues. Shall I take that? So I think this section has substituted, we have to just see whether it will be substituted. I think it will be a prospective, right? Because this has been not inserted, this has been substituted by the earlier section, and it is mandating this electronic furnishing of return for this each month by this registered person who is required to deduct the TDS irrespective of whether any deduction of taxes is made or not. So I think they are adding a mandatory filing of return even though whether the TDS is deducted or not. So I think this.
Just look at the old provision. Old provision says you have to file return for the month in which deduction has to be made.
Yes.
Green point there. This for every calendar month. And in the provision, whether or not any deductions have to be made. So now the person who is deducting TDS has to file GSTR 7.
Huh?
Seven. GSTR 7 you have to file irrespective of you have made deductions or not. Now going forward. Before only the monthly deduction has been made. That's all. Next.
I think the next sections are on 74A. So section
54.
121, 122, 123, we'll go to 124.
Yes, ma'am.
So 154 is, in this, second provision is omitted, and basically it is saying that no refund of this unutilized input tax credit or IGST will be allowed for zero rated supplies if these goods are subject to export duty. So I think they are bringing at par for those exports which are done without payment of taxes, along with the exports which are done with the payment of duties.
Look at what has been omitted. What has been omitted is provided further that no refund of unutilized ITC shall be allowed in a case where goods exported out of India are subject to export duty. What is being what was being prohibited before? ITC, where the goods you have exported are subject to export duty, then you can't claim refund of ITC. So only the ITC portion provision is dealing with. Look at the provision has been omitted, subsection 15 has been added. What is, both of them are complementary. Look at what subsection 15 is saying. Notwithstanding anything contained in this section, we'll stop there. Before it was a proviso. Provision means what? It is an exception. Exception to what? What is stated in that section. Now, notwithstanding, what is stated in that subsection? Provision to subsection 3 means it is an exception to subsection 3. It means its scope is there restricted only to subsection 3. It will not apply beyond. Look at now, subsection 15, it says, notwithstanding anything contained in this section, which means this will apply to entire 54. Provision applied only to one subsection, this applied to entire section. Notwithstanding anything contained in this section, no refund of unutilized ITC on account of zero rated supply of goods, or, this is important, integrated tax paid on account of zero rated supply of goods, what we call as rebate, shall be allowed where the zero rated supply of goods is subject to export duty. What is now added? What is now added? Before, I have exported goods, it is subject to export duty. What were they denying to me? Only refund of ITC. What is now going to be denied now? I am exporting goods. When I export the goods, two things I can do for GST. One, I can export goods without payment of duty, claim refund of ITC. I can export the goods on payment of IGST. Before, if you exported the goods on payment of IGST and those goods were subject to export duty, you would get the rebate. Now, because of this section, not only refund of ITC is disallowed, even the GST paid on export of goods. You understand, no? You can export one without payment of duty, you can export with payment of duty. Yes or no? If you export with payment of duty, what you will do? You will utilize ITC, you will pay the taxes, and then you will claim a refund of the output tax paid. So before, only ITC portion was there, which means you could have exported on payment of duty and you could have claimed refund. That is blocked. This is my understanding. Fair enough?
No, but why should the refund be disallowed? Because see, I would do an export with payment of tax where I am anticipating that my money in forex will not be realized within 180 days. Is that anticipation? Second is I will not have LUT as of now because I am exporting the goods. That is the only anticipation where I do export of goods with payment of tax. On satisfying that condition, I will again make application for refund. But export with payment of tax and refund.
No, you will get refund before. You'll get the rebate back.
Yes.
Now will you get the rebate back? Where the goods are subject to export duty, going forward, will you get the rebate?
I think this is applicable only for the few commodities. It is not for the whole. It is only applicable to the few commodities which is
Nothing like that
export
is
duty.
mentioned,
That is what this.
No, refund mechanism itself is automatic.
Yeah.
So the minute you file the shipping bill,
No.
That's a very narrow aspect that we are talking of. Before rebate, will you get rebate before?
I would get refund.
You get rebate of the, you get refund of the rebate.
Yes.
Now will you get
No, but what is the meaning of subjected to export duty is something which is...
Customs Act export duty?
But I don't think any custom duty there, no?
There are goods something like
So
iron and
only
steel.
those which are subjected to export duty.
Yeah, yeah.
Not
Before-
general.
yeah,
It's not a
something
general
like-
rule there.
Yeah, something
It
like
will be good
onions,
specific thing there.
onions, rice, steel, iron ore,
Coal is
coal. Where you're subject to export duty before, if you have gone under rebate, you would have got the rebate. Now,
Oh, that's what.
No, we will not get.
Commodity specific maybe.
yeah.
Not this may not be
Yeah,
a general
that's what I
rule.
got. Yeah. That's what I got.
yeah.
No, it will be-
No, no. The point is, where it was commodity specific before, they would not claim refund of ITC. They would have, indirectly they would claim by way of rebate.
Correct.
Which means this provision was nullified by the indirect method. Now, because this provision was nullified before, now they are saying if you claim rebate also, I'm not giving. So that is how they have plugged the loophole, is what I am trying to point out. All other things remaining constant.
So it's
Yes or no?
correct.
It's quite simple from what I am seeing. Okay, next.
What about all the refund I claimed before?
That is allowed.
No,
This is
as a
only,
specialist basis or maybe
No question of as-is basis. This is a new subsection which has been inserted. This provision will apply only going forward when it is brought into act.
So it doesn't say anywhere prospective, right?
All provisions are prospective until unless specifically stated in the bill to be retrospective.
Yes.
Okay, next. Summons,
One
highly relevant for all of you.
So anyway, we are skipping from 125 to 130, right? All 74 A's are there. So we are going directly to...
Only 74A is inserted, that's all. Next.
Yeah. So we are going to this 131. I think this is pertaining to the summons where an important amendment has been made here by inserting saying that all persons summoned under subsection 1 shall be bound to attend either in person or by an authorized representative. As such, officer may direct and the persons appearing shall state the truth during examination or make statements or produce such document and other things as may be required. So basically authorized representative, I think with this amendment, now authorized representative can appear for summons proceedings and submit the documents. So basically we want to understand, I think till now also, basically we were trying to assist them, though not we were as an authorized representative, we were assisting them to give the technical submissions or to understand what is the inquiry which the summons are conducting. So now you have to try to highlight what is the risk the authorized representative and what is the intention behind bringing this this amendment adding as an authorized representative.
Please look at 70 subsection 1. Thereafter will come to 71A. 1 is not there over here. I am reading it from the act. 70 subsection 1. Please visit here. The proper officer under this act shall have the power to summon any person whose attendance he considers necessary, either to give evidence or to produce a document or any other inquiry with an I in the same manner as worded in the case of a civil code under the provisions of CPC. Summons is always given to a person. Only that person should go and attend the summons. What got diluted thereafter is, along with the summons to whom it was issued, even the chartered accountant they started taking him. Because of course the managing director will not know. Even if the managing director knows he is afraid, say moral support, please come. Moreover, all accounts you know. So there is more of it's more of an experience that we have found out saying that sir, he knows he has done all the accounts. As if he has done business. He has only recorded your books of accounts. He knows everything, he will answer. So gradually what happened, the chartered accountant started assisting, which in my view, he should not have. Because he then becomes a part of the adjudication process. Not in adjudication process, part of investigation process. Which means he can then be called upon under CPC to give evidence about the truth of what has been given. If this was not enough, 1A has been brought in, which says all persons summoned under 1 shall be bound to attend. That section 1 itself says. Either in person or by an authorized representative. Now I have not done much of a research on this, but to my mind, if I have issued summons to person X, person Y cannot go on behalf of person X and answer. The way 1A has been brought in, either in person or by authorized representative, which means going forward from now on, if summons is issued under 70, all your clients will sit in the offices, all of you have to go to department. If you have had experiences of attending summons, they will call you at 10:30, meet you. Okay, it is difficult to it's a difficult process is all I can say. Next portion about the authorized representative. Now the authorized representative, either in person or authorized representative, as such officer may direct, and the person so appearing, not the person to whom summons is issued, no, person so appearing shall state the truth during the examination or make statements or produce such documents and other things as may be required. Up till now, summons statement, even though you had assisted, fully you have only assisted, who would have done? Who would have written the signature below? Client would have put his signature below. Who would be responsible for that statement? The client would be responsible. Now, you are supposed to give statements for your clients. Summon statement, your statement they will take. In show cause notice, if you summons, generally are section 67 cases. After investigation, you will give statement. First of all, it is during the examination. Second one, you have to produce documents, you have to produce documents. Whose documents is it? How can you produce? Your client's documents. And the producing on behalf of client is different. You are producing the documents is different. Over here, the way I understand it, you are producing the documents here. It may be of your client. Before, you are producing on my behalf. Now you are producing belonging to client. In my view, there is a lot of difference in that. Producing on behalf of someone and producing belonging to someone. Which means tomorrow, you have to stand, for example, in appeal when we file it, before or even now, tribunal, order copy, true copy we have to attest. What order in appeal is there, before you go to tribunal, true copy we have to attest. So what we will do? We will tell the client, you give me original of order in appeal. Order in original copy will be there in our file, true copy we will assist. Sorry, we will attest. Tomorrow you have to produce, that is on his behalf. Sorry, me attesting his document. Me attesting someone else's document is the example that I gave you. Order in appeal, I will attest as true copy to be filed before tribunal. Whose document it is? It is my client's document. Who is saying it is proper? That is the demand given in order in appeal is proper. I am saying it is proper. Therefore, I keep original of order in appeal in my file. Tomorrow you are doing that. Whether that is true or not true is now on your head. The way I will do it. That is point number one. Point number two, something goes south over here. Before it was the taxpayer's responsibility, now your responsibility too. So be careful. Okay, next. 77 next to policy.
Before going into this, can you just advise, like, because this has been incorporated?
There have been many cases where there have been many investigation cases which have added. We have never gone even for once stating or assisting the taxpayer. Before, if the taxpayer comes, point number one, first thing we tell him, tell the truth. If you don't know something, say I don't know. Tell I am going to get the details and come back. Say what the truth is. You are definitely not going to know what the tax position is. If you don't know what the tax position is, don't say. If you don't know what it is, say I don't know what the tax position is. Come back. Don't say anything else. Okay. That is what is to be given. As far as chartered accountants appearing on behalf of clients, big provision, there is big problem under CPC, big problem even under the C Act is my view. Next.
So next is on the very important section of 73 and 74, and I think very nice statement he has made. Goodbye, but we'll miss you actually. I think that is a tagline.
Yeah, there's a reason for that. Okay.
Yeah.
Okay. Ma'am, you want to say or?
Yeah, just a brief, I can just say that this 73 and 74 is applicable only up to the financial year 2023 and 24, and later on the 74 is inserted. My issue here is, because this amendment has come now in August 2024, and this is going to get concluded of 31/3/2024, So what is the effect of this transition from 1/4/2024 till the date this 74 is notified? This is the one aspect. And second aspect is, I know it is quite simple, but still I want to ask you that, is it that any further notices which we are going to receive for the previous financial year, are we going to receive in 73-74 or are we going to receive in 74A?
Okay, second answer is easy, I'll answer that first.
Yeah.
For the previous financial years, you have time period up to 5 years under 4.5 years to issue notice. Up till 23-24, you will get notice only under 74. 23-24 annual return due date is 31st December 24. 31st December 24 plus 5 years is 31st December 29. 31st December 29, 6 months before is 30th June 29. 74 will be operational up to 30th June 29.
I think we can show the page.
Yeah, I come to the table.
Yeah.
So therefore it is quite simple. For the previous years up to 23-24, 73 and 74 itself will be operational, though the notice will be issued now. For the period from 1st April 24 to whatever period you are saying, that question, I think it's very clear. In the marginal notes also they have said pertaining to financial year. If you look at section 132 and section 133, which all of you have, provisions section shall be applicable for determination of tax pertaining to period up to financial year 23-24 in both the cases. Once that is applicable, 173 and 74 is applicable till 23-24. From 74A will apply only from 24-25. Okay, this point is done. The important part that I want to you to look at is under 133 subclause 3, explanation 2 shall be omitted. What is this explanation 2? This explanation 2 was the definition of suppression. Our understanding, ours is a common law. What do you mean by common law? Common law means it is not only what is stated in the provisions of the law, it is also what is stated in judgments. That will also be treated as law. Under Article 142 of the Constitution, the decision given by the Supreme Court is law of the land. Suppression was not defined. Therefore, in a series of decisions, Anand Nishikawa to Univer Textiles, they have defined suppression meaning deliberate withholding of tax. Point 1. Point 2, it must be a positive action to withhold information. Mere non-payment of information is not suppression. I am doing a positive act, that is, I am doing something to conceal the information. That is suppression. To overcome those decisions, in my view, they brought in explanation 2 to 74, wherein they said you had to upload something in return, you have not uploaded, suppression. You have to give some information, you have not given that information, it's suppression. That is what this explanation 2 was saying. They have omitted that explanation 2 now. If they have omitted that explanation now, then the original decisions of the Supreme Court will apply. I have no understanding why this explanation 2 has been omitted, because if you come to page number 95, just before section 135, page number 95, just before section 135, the same explanation is inserted for the new provision. When the same explanation is inserted for the new provision going forward, I don't know why they removed it for the old provision. Point number 1. Point number 2, I know I'm stretching it too much now, but still, because it is an but still, if a provision is inserted as an explanation, then the understanding is it has a retrospective effect, because they are trying to explain the provision. Provision was there from before, I am now explaining it. That is why retrospective effect. don't feel bad, even I laughed at what I said, but still sticking my neck out. Can you say when an explanation is deleted, it will have retrospective effect? My God, touching it too much. But still, whatever notices gets issued from today, for the old notices are issued till this finance bill, it is there, great. But whatever notices come to be issued after this amendment happens, explanation will not be applicable. Which means for all the notices which will be issued up till 30th June 29, they have to prove suppression. As per that is okay. Next, going forward. Section 74, capital A. Okay. Okay, you have 74A1. Ma'am, you want to
Just in brief, I can add. I think this is the most important section. We have time. I'll just try to. I think we can extend, but basically. Yeah, 128A. So I think we'll just try to give in brief actually, then you can expand on those. So what I am able to find a difference between earlier 73, 74 and 74 is, one is on limitation and the second is it is not covering the tax due which is below 1000 rupees, which was not there in under 73 and 74. And third is there is an extension of time limit from 30 days to 60 days. And fourth is, I think this is a special section where they have given the time limit to pass an order by an adjudication officer, which was not there in 73 and 74. The time limit was not there. So I think that they have added. So I think, and I think penalty leviable, which we were discussing, that point 152.
Okay. Before I go to 74A, a brief background. Under GST, notices comes to be issued under two sections, 73 and 74. If it is fraud, suppression, misstatement, it is 74. Not fraud, suppression, misstatement, it is 73. Try and remember what I like to tell you. Because it is not fraud, suppression, misstatement, they say order has to be passed within 3 years from the due date for annual return. Assuming 24-25, assume 24-25, 31st December 25 is the due date for annual return. 24-25, due date for annual return is 31st December 25. Yes. Not fraud, suppression, misstatement within 3 years. That is 31st December 28, order had to be passed. If the order is not passed, lapsed. Fraud, suppression, misstatement 5 years. 31st December 25, within 30th December 30, they have to pass orders. Order not passed, lapsed. Next point. Order has to be passed in the 73 by 3 years. No, 31st December 28. Notice had to be issued at least 3 months before. So 31st December 28 means notice had to be issued latest by 30th September 28. Notice not issued by 30th September. Notice issued on 1st of October 28. But order passed before 31st December 28 still lapsed. Order is within time, notice is beyond time. Similarly, fraud, 31st December 30, within 6 months means 30th June 30 notice has to be issued. Notice issued on 1st July 30, order issued before 30th December 30, lapsed. Because notice at least 6 months before. Understood this part? Okay. Next, under 73, maximum penalty is 10% or 10,000, whichever is higher. Under 74, penalty is 100% of tax. Understood? Next point. Please pay attention to what I am saying. When the slide comes, I will say already told this and move further. Under 73, if I pay the tax plus interest before issue of show cause notice, or I pay the tax plus interest within 30 days from issue of show cause notice, no penalty. Clear? Under 74, if I pay tax plus interest plus 15% penalty, remember this is a fraud suppression case, no? So tax plus interest plus 15% penalty, if I pay before issue of show cause notice, they will not issue show cause. I have not paid. If I pay tax plus interest plus 25% penalty, within 30 days of issue of show cause notice, don't pay reply, order also will not be passed, deemed to be concluded. I have not paid this. I have to file reply, order will come. Now order I have to file appeal. From the order date within 30 days. From the order date within 30 days, tax plus interest plus 50%, 50% penalty. It is deemed to be concluded. Don't pay the balance 50%. Understood? This is all 73, 74. 74A is not a new animal. 74A merges 73 and 74. You said it merges 73 and 74. What's the fun? There is a difference. The fun is, before, order passing was 3 years and 5 years. Now they have not made it 3 years, 5 years. Now they have given time limit with respect to show cause. Before, for show cause also we had time limit. 3 months before order, 6 months before order. Now they have not done like that. Now they have said show cause notice 42 months. Whichever it is. Fraud, suppression, misstatement 42 months. No fraud, no suppression, no misstatement 42 months. Is it okay?
What department?
I'm asking you, do you feel it is okay? Originally, when the demand provisions were there under the Excise Act and Customs Act, for other than fraud, suppression, misstatement, it was 6 months. Fraud, suppression, misstatement was 5 years. From 6 months, they increased it to 1 year. From 1 year, they increased it to 18 months. From 18 months, they increased it to 30 months. Under the old law, from 30 months, they increased it to 3 years. Before, when they said, for other than fraud, suppression, misstatement, you have to issue notice within 6 months. Fraud, suppression, misstatement, 5 years. Why this huge gap? This huge gap is because the nature of indirect taxes is such that the burden is on the recipient. Recipients will generally not be repeat customers. So if the person comes and is gone, I will not be able to trace the recipient, which means tomorrow orders come, I have to bear it out of my own pocket. That is why they said inadvertent nature, I have to issue within 6 months. If within 6 months I am not able to issue and it is not fraud, no suppression, no misstatement, gone. You can demand tax. Maximum period you can demand tax is last 6 months. Whereas fraud, suppression, misstatement, I can go back 5 years before. That has been increased from 6 months to 1 year to 18 months to 30 months under GST law to 3 years, and now they have equated fraud, suppression, misstatement with an inadvertent non-payment of tax, which means person who does fraud also, same time show cause notice, right royally I am doing business, same time of show cause notice. Is it fair? There is something which is basic to our constitution called as, you can't treat equals unequally, you can't treat unequals equally. This is falling under the second category. Person who does fraud, suppression, misstatement cannot be equated with a person who has not done any hanky-panky. They are unequals. There is a, what in legal terms is called as a intelligible differentia. That is, there are two class of persons and I have made two class of persons on the basis of some intelligible reasoning. Once I make those two class of persons, Article 14, right to equality will not apply. Now, by stating notice same 42 months for right royal, same 42 months for person who's done fraud, suppression, misstatement, who is it going to hurt more? Person who is doing it properly, it is going to hurt more. Because person who is doing fraud, suppression, misstatement, it will be difficult to catch him. That is point number 1. Point number 2, if you remember, I said before fraud, suppression, misstatement, I said at least 6 months before. 6 months before what? 5-year period, no? 31st, this 24, 25, you remember, I said 31st December 25, 5 years is 31st December 30, 6 months before is 30th June 30, which means time limit to issue notice in that case was 12 paisa 60, 60 minus 6 is 54 months. Before, for fraud, suppression, misstatement, time limit to issue notice was 54 months. Under the present 74A, the time limit for fraud, suppression, misstatement is 42 months. Which means, if you are doing fraud, suppression, misstatement, I have to catch you early. If I don't catch you early, you can go scot-free. Understood? Now let us come to person who is doing it properly. Before, 24-25 means annual return due date is 31st December 25. 31st December 25 means 3 years, which means 31st December 28. 3 months before means 30th September 28, which means within what period I have to issue show cause notice? 12 3s are 36, minus 3 is 33 months. 31st December 25, 3 months. 3 years is 12 3s are 36, no? Minus 3 is 33 months, which means before I have to issue notices within 33 months. If I issue notice after 33 months, gone. Now what is the time limit? Which means if you are doing business properly, I am increasing the time limit for you. From 33 months, I have increased the show cause notice period to 42 months. 33 to 42 means 9 months extra I have got. For whom? Who are doing business properly. Person who are doing fraud, suppression, misstatement, 12 months I have reduced. That's why I said right at the beginning of the presentation, I will try and give the provisions threadbare to you. You make your analysis of how the provisions are. Whether these provisions seem to be right or seem to be. This is the sum and substance of 74 capital A. Next, you remember for 73 I said before show cause notice, no pay tax interest, no penalty. Within 30 days, pay tax plus interest, no penalty. 74, before notice 15, after notice 25, after order 50. Same thing is there under 74 capital A also. Only thing is, you remember I said 30 days before, 30 days from show cause notice, 30 days from order origin. That is made 60 days. Very good. You are giving me more time. So now, up to 60 days I have from notice to pay penalty. Up to 60 days I have from order to pay penalty in case of fraud, suppression. Understood this fact? This is more or less what is there under 74.
Can we look into another way also of this 74A, where it has reduced this legal ambiguities which the department was having today? I think we would have seen in our experiences, most of them were issuing, state departments were issuing the notices under either 73 or 74, whereas the central government were issuing, central officers were issuing under 74, and then, so is it not 74A is reducing your legal ambiguity in issuing the notices? Can we look the positive side of that 74A and reducing all these administrative issues what the department is having today? In between 73 and 74 and some issues under 73, some issues under 74. So can we look the other part of that 74A also, what you are having?
Kindly pardon me, I seem to have a tangentially opposite view to what you have stated, because kindly come to page number 96, subsection 2 capital A. This is what happens when both of us are busy and come to the PPT without speaking before. Okay, not a problem. Two independent views are coming.
It's a thought process.
Before I, page number 96, 75 subsection 2A. Before I take you to 75 2A, please listen to what I want to say. Or you read 75 2A, then I'll say. Other people 75 2A. No, listen to what I have got to say. You have got before 75(2)(a, you have got section 75 subsection 2. What is the 75 subsection 2? 75 subsection 2 says where a notice has been issued under 74, which means what? Fraud, suppression, misstatement, which means what? Tax demanded for 5 years, which means what? Penalty equivalent to 100%. Notice is issued under 74, alleging fraud, suppression, misstatement. Order is also passed under 74. I take it in first appeal. First appellate authority says there is taxes payable, but there is no fraud, suppression, misstatement. Interpretation issue. Generally, first appellate authority will not say this. Tribunal will say. When I go to tribunal, tribunal will say, okay, tax is payable, no issue, but definitely not a question of fraud, suppression, misstatement. In those cases, 75 subsection 2 said, treat it as though the notice was issued under 73. What do you mean by treat as though the notice was issued under 73? It means before, under 73 I can demand tax for what period? 3 years. Under 74 I can demand tax for what period? 5 years. So if I treat a 74 notice as 73 notice, what happens? The first 2 years. If I am issuing notice now in 25, 5 years before I have to go. The first 2 years will go. That is 25 means 20 and 21 will go. Only the last 3 years will come. Because that becomes 73 notice. Which means entire first 2 years tax went. What about the interest at the rate of 18% for 5 years? Interest at the rate of 18% for 4 years went. Penalty at the rate of 100% for first year and second year went. Of course, last 3 years penalty is now at the rate of 10%. Because of this provision, 74 capital A. Now, if you read 75(2) capital A, 75(2) capital A is saying where a notice is issued saying that it is fraud, suppression, misstatement, but fraud, suppression, misstatement is not there, then what does it say? It only says penalty payable will get reduced. Which means what? If it's fraud, suppression, misstatement, what is penalty? 100%. No fraud, suppression, misstatement, what is the maximum penalty? 10%. They are saying if it gets converted from apart from fraud, suppression, misstatement to other than that, only penalty gets reduced. Entire tax is now there, entire interest is now there, only penalty got reduced. So, issuing notice under 74, issuing notice under 73, as compared to issuing a notice under 74 capital A, my God. People are sitting there really have brains. They only reduce your penalty from 100% to 10%. All your entire demand is now there. And that is the effect of.
Time limit is same.
Huh?
Time limit is same.
Time limit is same.
So it should be fine.
Yes. Before I would have not paid taxes for 2 years. So this is this for example in this case, what are the 17, 18 and 18, 19? I would not have paid taxes. I would have paid only taxes from the next period. Okay. This is the fair enough? 73 and 74. Okay. Yes. Whatever I have explained, 3 years, 5 years, here 42 months. One point I have to explain. Before, the order in original, what was the time limit? 3 years or 5 years. Now, they are saying 42 months is the same period which will apply to everybody. Fraud, suppression, misstatement, it is 100% penalty. Other than fraud, suppression, misstatement, it is 10% penalty. Apart from that, everything is the constant. As far as passing orders, they have said it will now be 12 months from the day of the issue of notice. They didn't stop at that. They said if for any reason can be anything, including high docket load, so therefore I was not able to pass orders. for any reason I am not able to pass orders, I will give you 6 months extra. So 42 months plus 1 year to issue order. We know 1 year will give you time. 1 year also you are not able to pass order. We will again give you 6 months time. Of course, prior approval of above JC. Any officer above JC, prior approval 6 months. It is not a reason to believe or for causable action, nothing. Any reason. So therefore, time will get increased. This is the one effect of.
Yeah.
Okay.
Then shall we go?
Just one particular point. If you come back, there's one nice point that is there in spite of all this. If you look at page number 9274A1, there is a proviso. Page number 9274N, there is a proviso. What does the proviso say? The proviso says if I have not paid tax or if I have wrongly advertised ITC or there is an erroneous refund less than 1,000 rupees, I will not issue show cause notice. Fair enough. Few of them are laughing, saying that, oh, what is there, 1,000 rupees, fair enough, peanuts, laughing peanuts. Look at it in this way. What people would do is, they will issue notice for even paisas in a few cases.
Penalty 10,000.
Penalty 10,000. 10,000 CGST, 10,000 SGST. 20,000 penalty. That goes out. That goes out. And there have been cases where they have not issued order for the entire financial year 24-25. For April 1 order, May 1 order, June 1 order, 12 orders. He has not given one order for the whole year. He has given 12 orders for 12 tax period, 20,000 penalty for April, 20,000 penalty for May. Okay, this is basically the sum and substance of self for capital gain.
One query, sir. 74A, subsection 2.
Yeah.
Just want to discuss the mischief actually.
Ah.
So we have issue where 42 months is a timeline. Okay. I am doubtful of a certain credit. Can I claim? Can I not claim? So I claim and put it under re-avail.
Okay, sir.
Until unless there is a decision which may come tomorrow, whenever it's disputed or whatever. Post 42 months, I will put it in my 3B. From the credit ledger to regular, I will regularize the credit.
Okay.
Now, this 42 months, this credit originally actually, the date is, let's say 2021.
I got
because,
the point.
Sorry.
I got the point, sir. And if utilized, you will get caught.
Can they?
Again you will go. Utilized, you will get caught. 42 months from the subsection 1 says ITC wrongly availed or utilized. Both is there. So availed is taken. So before, now you will retake the credit back. You will set it off now.
Correct.
Utilized happened now.
Correct.
42 months from now. So even that will get covered.
It says financial year to which the tax not paid or short paid or into credit wrongly availed.
Or utilized. I will utilize it now. Avail, reverse. 42 months time over. I will reclaim now. Utilize. So cause of action for utilization comes now.
It will no more belong to that period, it will belong to this period.
Utilization will not be there. Avail hoಗ್ಬಿಡುತ್ತೆ, utilization not ಬರುತ್ತೆ. Fair enough, no? Okay, done.
So we go to 107, sir.
Yes, ma'am.
Clause 37.
107. This is relating to appeals. They have done it nicely. It's really nice. First Appellate Authority, what is the pre-deposit rate? 10%. Tribunal pre-deposit rate? 20%. Total how much? 30%. This is in percentage terms. In absolute terms, they said 10% or 25 crores, whichever is lower. No, whichever is
Lower.
lower only, no? Correct. 10% or 25 crores, whichever is lower. So if my 10% was greater than 25 crores, my pre-deposit would get capped to 25 crores. You must now be asking, sir, where pre-deposit 25 crores will come? Game craft, Karnataka High Court only, 21,000 crores demand. 10% of that is 2,100 crores. that this cap will apply. So it is 25 crores. It is 25 crores C, 25 crores S, sir. So it is 50 crores, sir. So at Commissioner Appeals, I have to pay 50 crores, sir. Tribunal, it is 20% or 50 crores, whichever is lower, which means 50C, 50S, which means 100 crores was the absolute terms which I had to pay. Am I going fast? Commissioner Appeals 10% pre-deposit, Tribunal 20% pre-deposit. Total how much? 30% pre-deposit. What is absolute terms for Commissioner Appeals? 25 plus 25, which is 50 crores. 25 under C, 25 under S. So 50. Tribunal, it is 50 crores under CGST. So 50 under C, 50 under S. So 100 crores. So how much is the total you would pay? 50 under Commissioner Appeals, 100 before tribunal, total you would pay 150. Now, the amendment that they have made before Commissioner Appeals, from 25 crores they have reduced it to 20 crores. Which means C, the capping is maximum 20 crores, S, the maximum capping is 20 crores. Which means now we are liable to pay only 40 crores as against the old 50 crores, 10 crores saving. Tribunal, before it was 20% in terms of percentage terms, that they have reduced it to 10%. So before it was 10 plus 20, now it is 10 plus 10. So even for the, who will pay pre-deposit of 40 crores? Big MNCs. Amongst us, most of them are not going to. This will help for people who we are taking appeal. It was 10 plus 20% before, now it is 10 plus 10. So even for them it will help. Further, for the absolute terms, it is how much? 50 has now been made to 40, no? 40. So before, tribunal was 50 plus 50. It is 100 before. Now 50 crores they have reduced absolute terms also to 40 crores, which means 40 plus 40 is 80.
20C is 20S.
20 crores.
No, one second.
20C, 20S.
50 crores the word, 20 crores is substituted.
20 crores is substituted, section 112.
Yeah.
Total 40.
20 crores. So total is 40.
Yeah.
Which means under the old scheme you would pay 50 plus 100, 150 crores. Under the new scheme you will pay 40 plus 40, 80, which means 70 crores there is a reduction in absolute terms. Basically I am saying pre-deposit has reduced, whether it is for a lower person or for a higher person. Before it was 25 crores commission, now it's reduced to 20. 50 is now again reduced to 20 for criminal also. This is your appeals.
Sir, in between I just take one practical
Yes,
issue.
ma'am. Yes, ma'am.
This notification is saying there is a reduction of pre-deposit for the tribunal to 10%. But whereas it is not as notified, so we have lot of appellate orders which is passed by the first appellate authority, and already the tribunal is not yet constituted. The recovery proceedings are going on from the departments. So should we make a pre-deposit of 10% or 20% is a big challenge for all of us today. So though there is a circular giving a clarification that you can make through all that DRC 3A, take your undertaking that you are filing an appeal, but practically it is giving an indication that it is going to reduce 10%. But as on date, till it is getting notified, what you advise all of us to, should we challenge on that, or should we pay 10% or should we pay 20%? Because few of them have gone to the courts on this issue. So if you can just throw some light on that.
Please forgive me, madam. I'll answer your question because the question that you raised, another point rose.
Yeah.
This happened under the old laws with respect to pre-deposit itself. Pre-deposit was not there under excise and service tax. Then they raised it to 7.5% before Commissioner Appeals and 2.5% before tribunal. So the question was, the 7.5% and 2.5% will apply for which appeals? I have made amendment in this 24-25 amendment. So all the appeals filed after 24-25, I have to pay 7.5 and 2.5. That is your understanding, no? No. Supreme Court stated that the appeal provisions will apply at the time when the LIS, LIS, when the LIS originated. Which means this 2.5% and 7.5% when they brought in the pre-deposit, no, they said it is not applicable for appeals filed after that finance bill. It is applicable for all show cause notices we started after that. Because for all the appeals which are already pending, when that budget is there, the notice has already originated before. If the notice has already originated before, you cannot change the appeal provisions to the detriment of a person. So therefore they said, for all appeals filed for notices issued before this budget amendment, no pre-deposit. Only for show cause notices which were issued after the pre-deposit provision came, only for those the pre-deposit applied.
Yes, sir.
I can very clearly understand that I have confused all of you. All I want to say is the appeal provisions will apply if an appeal provision is there, notice must be issued during that appeal provision. Those appeal provisions will apply. If there is any change in the appeal provisions, whatever notice comes to be issued after the changed provisions, only that will apply. Here it is going to work backwards first.
But portal will be fixed in a particular way.
Let us see. If portals it gets reduced, great. That is the first point. Second point is with respect to question that Madam has asked. With respect to pre-deposit, I mean what we should do. In cases where we are handling, where the order of commission appeals has come to the respective jurisdictional authorities, we have written the notice, we have written a letter saying that we have got the order, time limit for filing the appeal has not yet arisen. So therefore, we have written something called a cease and desist letter. It is called a cease and desist letter. Cease from taking action, desist from recovery. So therefore, we write this letter. Even after, that is the important point, because in this case, you have given a notice to them not to take any action. With the underlying reason being, appeal mechanism is not there. After that, if any recovery mechanism, if they take a recovery action, we simply take the acknowledgement of cease and recovery letter to the court and say, we have already intimated them, in spite of us intimating, they have done recovery. That's all.
But that circular says you have to pay the pre-deposit.
There is something called, this is what is happening. What is the provision saying? There is something called as removal of difficulty order. Removal of difficulty order 9/19 central tax.
Yeah.
Okay, removal of difficulty order 9/19 central tax. What is the removal of difficulty order saying? The removal of difficulty order is saying you have to file appeal within 3 months from the date the order is communicated or the date on which the president takes office. Unfortunately for all of us, the president took office on 6th of May 24. All of you have seen that photo, no? Finance Minister giving vote to the president. So 6th May 24 he took the office, which means 3 months period started from 6th May 24. Which means all of you who have got order nothing should have filed. I will file to where? Registry itself is not notified. If registry itself is not notified, where will I file appeal? That is why now under section 112 they have made an amendment. What amendment they have made is the limitation period will start from such day as will be notified. So once that notification happens, it will happen. So therefore, in all appeals case, we are not paying any pre-deposit because there is not, in my view, my understanding, even the portal is not yet
not yet
activated. So therefore, we have written this letter and closed it. Okay, I come to this slide. What is this slide saying? This slide is saying GST 80 will not only act for appeal, it will now also act as a national anti-profiting authority. Under 171, there is National Anti-Profiting Authority. You know who was notified? Competition Commission of India was notified. Now they have stated Competition Commission of India from such date as we will notified, they will not take the cases. Who will take the cases? GST 80. Which means what? GST 80 will act as adjudicating authorities. Because if the word that they used is examination and adjudication is there. The word adjudication is there. The point I am trying to bring before all of you is, can you make an appellate authority a adjudicating authority? Okay, but they have made it. Okay, the next another point in GST 80 rate stat is, when we had to file appeal before GST 80, 3 months is the time limit to file appeal, continuation of delay was 3 months. So total we had 6 months. What was the time limit given for department? 6 months. Department did not have continuation of delay. Why? Anyhow they had 6 months to file appeal. We had 3 months to file appeal. For us, continuation of delay is 3 months. So total is 3 plus 3, 6. They originally itself had 6 months. You know what amendment they have now brought in? Now they have stated continuation of delay should be applicable for department also. So they will get 3 months over and above 6 months. That is the next point. Which means for them time to file appeal is 6 months. If they, because they are very busy and they can't file, they will be given another 3 months to file appeal. Amnesty scheme. If you would have completed this without amnesty scheme, it is sort of not doing justice to the entire point. You want to take it from here?
Yeah, it's a position. Yeah, 128. We'll directly go to 128. So
we have covered all the other points.
So the
everything we have covered.
electronic commerce operator,
Everything we have
yeah.
covered.
So I think this section is the most awaited section, and it has a lot of interpretations. I think we had more than 1 hour discussion yesterday only on this section. So basically this section is going to waive your interest and penalty if the full tax is paid by within the notified date for the notices orders under section 73 for the period 1/7/2017 to March 31st, 2020. So this is applicable only for the period from 1st July 2017 to 31st March 2020. It is excluding this appeals pertaining to the erroneous refund. Now, before going into what we would like to have is whether this is applicable, as we are very clear that it is applicable to the adjudicating order, revisionary order or appeal order. The only issue is what we are having today is whether it is applicable to the appeal which are filed beyond the time limitation. That is one aspect we would like to understand. And tomorrow if we are going to go for this scheme where you have already paid the taxes and if the notices are issued only for interest and penalty, whether I can take the benefit of this 128A. And the third point is where I have paid the taxes under protest, whether I can take the benefit of 128A.
Okay, she's asked 3 questions. Question number 1, where I have not filed appeal within the time period.
Yes.
Can I take the benefit of
128A.
128A? Yes, you can take. No order is being passed in this one. Appeal.
Because this is something I think we have to recommend.
Okay, can I answer that once I take them?
Yeah,
through?
yeah,
Can you
sure.
just repeat those questions? Because
Yes.
answer you know that. Okay, amnesty scheme. Who can apply? Person whose chargeable with tax, that person will have to apply. What stage can he apply? He can apply at a stage when DRC 01, that is show cause notice is issued, or DRC 02, statement, subsequent period show cause notice statement, that is DRC 02. Either DRC 01 you have been issued or DRC 02 has been issued and it is pending. But the most important point is that DRC 01 and DRC 02 must be issued under section 73. If the notices are issued under 74, not applicable. It is applicable only for notices issued under 73. This is the first point. Second, notices have been issued, orders have now been, first point is notice is issued pending adjudication. I only have notice, order has not yet been issued. Can I apply? I can apply. Okay. Second case, notice issued, order passed. If you pass orders, what will you get? DRC 07. That is, an order will be passed under which section? Under section 73. The order must be passed. In those cases where the order is passed and appeal is pending, the word used is an order is passed under 9 and where no order under 11 of 107 or 1 of 108 has been passed. So therefore, DRC 07 has been issued. That is the order original stage. Next stage, where I can file appeal. Order in appeal has been issued. First appellate authority, he has issued order. After he issues order, what document he will issue? APL 04, giving the summary of the order. APL 04 has been issued, or this particular notice has been taken for CO motor revision under 108. Then he will pass CO motor revision order. He will also issue APL 04 only. So APL 04 has been issued. In both these cases, APL 04 is issued pending appeal before tribunal. Which means what? Notice stage also will allow you to go to appeal, amnesty. Commission appeal stage also, we are going to allow you to go to appeal. Order in origin also we are going to allow. Commission appeals also we are going to allow. Next, for what period will this apply? Only for the period June 17 to March 20. Next, what should I pay in the amnesty scheme? I must pay the full tax. Means what? Tax as demanded in the show cause notice. Next, tax as demanded in show cause notice if it is in show cause notice stage. What happens if it has gone to appeal stage? And appeal stage, are you aware that section 107 subsection 11, the commissioner appeals can issue show cause notice? Notice is issued under 73. I go in appeal to the commissioner appeal saying that this 100 rupees what he has demanded tax is incorrect. Commissioner appeal says, wait a minute, I agree with you, 100 rupees demanded is not correct, it should have been 120. You got what I said? But notice is issued only for 100, so what about balance 20? Balance 20 notice the commissioner appeals will issue. So, over here, full tax is not 100, full tax became 120. Show cause notice tax was 100, commissioner appeals issued another 20 rupees for show cause notice by commissioner appeals. So therefore, that is before commissioner appeals. Similarly, notice is issued for 100 rupees. This has been taken for revision by revisionary authority 108. He says 100 rupees is not the proper value, 150 is the proper value. Full tax over here means not 100, full tax over here means 150. Before what time should I pay the tax? That time has not yet been notified, it will be notified by way of a notification. What is waived? Interest. All the way from 70 to 24 at the rate of 18% or at the rate of 24% as the case may be, plus penalty at the rate of 10% of tax amount, that is waived. What happens if you pay? All proceedings are deemed to be concluded. Okay. Will any conditions apart from this, will there be any conditions? Yes. They are saying with rules as may be prescribed, which means you have to again wait for rules. Will scheme apply to 74 notice? No. You remember I said notice was originally issued under 74. I go to Commissioner Appeals. Commissioner Appeals says there is no fraud suppression misstatement. He will say it is 73. If he gives such a kind of order, will this amnesty scheme apply in such a case? Should it apply? Yes, it must apply. So prima facie 74 notice doesn't apply. If you have to come under this scheme, what you must do? File appeal, show there is no suppression, make it 73, take the scheme. But the only thing is within time limit for notification. You have to pay within that time. Can department file? We have seen so many amnesty schemes. We have not seen these types of options come. You have gone on an amnesty scheme. You have paid the full tax. They are saying it is deemed to be concluded. The provision is saying department can file appeal against these notices which has been concluded. The word used is paid and concluded. That's the word used under what we did capital A. You have paid and concluded. Department has gone in appeal against what you have filed. And if the first appellate authority or the tribunal or the High Court or the Supreme Court says any additional amount is payable, then that additional amount is also payable by you within 3 months, no?
Yes.
It's payable within
3
months. Thankfully, no interest and penalty. Okay. Can department file appeal? Yes. Also, okay. Okay. Can I file? So department can file appeal, no? Similarly, you will pay the tax, but according to you, tax is not payable. But you want to save on interest and penalty. So you will pay and you will conclude. Can you also go and appeal? Department have given chance to go and appeal. Can you go and appeal? Heads I win, Tails you lose. Okay. Okay. Will this scheme apply for erroneous refund? No, this scheme will not apply for erroneous refund. Okay. What happens in cases where I have 73 notices already there? I paid the tax, interest and penalty already. Because the scheme is there, the other people who have not litigated, who have paid the tax and interest, can they now come under the scheme and say what interest penalty I have paid? Others are getting waiver. You please give me also waiver.
Unequals treated as equals.
Unfortunately, you have a Supreme Court decisions for amnesty scheme saying that Article 14 will not apply. Which means basically people who litigate will get benefit. People who have not litigated and paid have paid both interest and penalty.
So should
what
they
happens
litigate
when
that?
there is only an interest notice?
What happens when there is
show
only-
cause notice itself is only for interest.
And
Why do you use tax?
section also states that it's notwithstanding anything to the
Good point.
contrary where any amount of tax is payable.
Excellent
So the
point.
Order only for interest and penalty
Yeah.
not applicable.
This is the issue actually. Because
That is a good
Notice
issue.
must have tax.
Huh?
Notice will have tax. Without tax, there is no notice possible.
No, there are
Order will
cases
have
where
interest.
only interest is there.
They will have tax, but they will apportion it.
No.
Very interesting notices issue ಆಗಿದೆ.
ಇದಿದೆ.
Very interesting notices issue
That too for
ಆಗಿದೆ.
the,
73 ಅಲ್ಲಿ under 73, look at under 73, there was no provision to issue interest under 73. That is why they went to Karnataka High Court. Karnataka High Court said notice must be issued for interest also. I forget that case. Very interest, very penalty. Only penalty notices are there.
yes.
No doubt about that. Only interest also notices are there where tax has been paid but interest has not been paid. We are handling it.
Yes.
Good point which madam is making. I am fighting only against interest. I am fighting only against penalty for a tax I paid under 73. In my understanding, you should get it, but the way it is worded, no. Because sorry.
It is stating as
Because
Tax payable.
the way it is worded, where any amount of tax is payable. Tax is not payable because I've already paid the tax. I think to that extent we have to litigate this issue. Where you have got only interest and penalty notices, where tax has already been paid, you are litigating for that should have been included over here. That is a clear case of treating equals as unequals. Person who has not paid interest and penalty, he will pay tax, get away. Person who has already paid tax and litigating on the same interest and penalty, he will not get. I think it is a lapse. I don't know.
Sir, if you read this general discipline, even it says that even if that interest is not there in the order, it is still leviable. So something can you take that as a ground here to say that the benefit, because see, ultimately this scheme is introduced to give a waiver of interest and penalty. So the intention is, see, in many instances we would have paid under protest during this adjudication and we are litigating for interest and penalty.
They are adjudication levies, they are not tax.
No, and
Maximum ITC we can say as tax.
Yeah, so I
And
think,
general practice also, once order is issued, even if with the intention of litigation also, they will pay full tax.
yeah, that's what I'm
Interest
saying.
penalty they
Many
keep
cases, just to avoid the
Ah,
higher
the not
interest
first
Save on
cost.
the interest.
Yeah, save the higher interest cost.
We have made so many such
We have also
statements.
That's a
suggested
common
that
We have suggested our clients to pay the tax under protest is not there and then litigate.
Yeah,
They are not
something
doing
kind
that.
of that, yeah.
Good point. We
So I
have
think
to.
that suggestion is made actually. I think hope they will bring it out.
I think
Yeah, the suggestion
that
is
needs
made.
to be brought in.
It has been given to them. Let us see how.
Okay.
One more thing, see generally taxes, once the order is passed, the taxes are paid through DRC 03. Correct? Now this concept of debit in the direct
Yeah,
bank.
3 years.
DRC 3 is not acknowledged in DRC 4. Now that if I
Yeah,
they have
DRC
to be
4.
acknowledged in DRC 4.
Ah, correct.
Payment has to be acknowledged.
Correct.
Now in cases where I say that I have paid tax, interest, penalty, I will make application for refund as wrong payment in DRC 03. Can I not litigate that and now
Good
bring
point.
back to this thing?
I think you can. Because they have not yet acknowledged it. So I
Exactly.
will say it is an excess payment of tax.
Exactly.
I
Now
think
for
that's
this scheme I will do this.
I don't know how many of you heard what he said. It's a very nice tax point he said. What he said is if you have already made the tax payment in the DRC 03, where DRC 04 has not yet been issued, which means acknowledgement has not yet been given, you will file immediately a refund application and say, sorry, I have made the payment in excess. So it is as good as Chandrapur Magnet's case, as good as non-payment. So therefore, I will treat it as non-payment. I will come under the emergency.
I think to avoid
It's
this,
given a solution.
Sai, I think to avoid this, now they brought an amendment in this notification 4/2024 where any payment is made through DRC3 and acknowledgement has to be made through DRC4. So now they have,
Exactly.
yes.
But they are not
Now
yet made.
Yeah.
So we
Till
have
the time it is
option.
made, we already filed refund application.
Yeah,
Before
so I
the
think
issue.
from July it has got effective, that notification. So I think prior to that you can look into that.
Last point is with respect to, in my view, how what do you call getting very representing. What is that? I'm not getting the word. Okay, how representing before the department helps. About 20,000 crores worth of show cause notice was issued to insurance companies. What was that 20,000 crores? To all the insurance companies together was about 20,000 crores. What was that notice all about? I am insuring a plane. The plane costs a lot of money. So the plane has been assumed insured for $1 billion. Doesn't cost that much. Assume $1 billion is the insurance. What I do is I take 3 persons. I am the lead insurer. X Airlines. I take the premium of $1 million. I issue insurance premium $1 million, 18,000, whatever is the GST, 18% on that. I charge. Something happens to the plane, I'm gone. So I am the lead insurer. I will have 3 other insurers with me, who I call as co-insurers or reinsurers. What $1 billion is there? I will keep 25%. Balance 25% I will transfer to all the 3. Which means tomorrow if something happens, I will pay 25% of $1 billion, all the other 3 will pay 25% of $1 billion. Now, they became reinsurers. Which means, I have to now pay insurance premium to all the 3 of them. Okay, this is point number 1. Point number 2, I pay reinsurance premium, I charge something called a seeding commission. Seeding means to seed, means to give away. What have I given away? I have given away my business. $1 billion was my business. I have given $75 million as to all the 3 of you. So I will charge a seeding commission. So assume my policy to the airlines is 100 rupees. I have charged 100 rupees to the airline. 18 rupees GST I have collected on that full value. I have paid the 18 rupees to government. I will now, all the 3 people will issue 25 rupees premiums to me. Fair or no? Fair enough or no? They are getting 25% they have to pay. I am taking reinsurance. Each of the 3 of the people will now issue 25 rupees premiums to me. Which means I pay 25 to A, 25 to B, 25 to C. This is what I am paying. What I will charge from them is, because I am giving them 75 rupees worth of business, I will charge say 1%. 1% of 25 rupees, 2.5 rupees I will charge from each of them. I have to raise invoice on them for 2.5 seeding commission I have to give. This is how the insurance business works. What they will do is, instead of me paying 25 and taking 2.5 from them, 22.5 I will net pay. Fair enough, no? Reinsurance premium is 25, seeding commission which I have to get is 2.5. I will net off and I will pay 22.5 to each of the 3 people. Tell me whether all these co-insurance, whether it is supply or not supply. Supply or not supply. I have paid 18 rupees, I have paid on that. On all these people, when I would have paid reinsurance, I should take ITC, no? For all these 25 people, I should have taken ITC, no? This ITC I must have set off against my output tax liability on 100 rupees, no? What has the insurance company done? Insurance company has paid 18 rupees or 100 rupees charged on the airline. Full 100 rupees is the insurance value, full 100 rupees this lead insurance company has done. On these 25, they are not paid. Reinsurance which they are giving, they have not paid. Seeding commission, is it not something similar to business auxiliary service? Should I not charge GST on the 2.5? I have not charged that also. On the total 100 rupees I have however paid. You remember subcontract? Under VAT, if the main contractor has paid everything, subcontractor did not pay. Service tax, they litigated it like leather and whatever. And they said, no, even if the main contractor has paid, subcontractor still has to pay. Despite saying under VAT they have allowed you, please. No, separate service. Only for insurance business, they have stated this reinsurance will be treated neither as supply of goods nor supply of services. All other people who are doing subcontract work have to pay. Reinsurance people, mind you, they are in thousands of crores of rupees. All of us are like some, I don't know what contract we are going to get from government. That subcontract we would have given. For us, no, subcontract we have to pay.
Industry practice.
Industry practice. So, I am saying the representation works. 20,000 crores is now a null and void notice. So, this is what it is. Kindly forgive us, we have taken 25 minutes extra. Thank you for your patience here. Thank you.
Thank you so much. Any doubt anyone has before we conclude on this? So, in summary, we understand that whatever the budget proposals we have read, I think it is subject to still further amendments based on the recommendations. I think and few were based on certain judicial pronouncement, few had a certain reasoning for inserting. And I believe that few of the amendments have removed these hurdles in the business. And I believe that once it is notified, it will definitely remove the hindrance for seamless operations of all our business entity. So with this, we have discussed as within the time limit prescribed and as is basis as we discussed at the beginning. So we have tried to highlight all these macro amendments in this budget and let us await for the final notification. Yes, madam. Yes. Thank you, madam.
Thank you to both the speakers, Saiprasad and to Annapurna Kabra, for their valuable time which they have spent and enabled a detailed and clear understanding for all of us on the GST matters. I think it was a wonderful discussion what we had. On behalf of Bengaluru branch, we thank you wholeheartedly to both of you. I request the chairman to hand over a memento to them as a token of appreciation. Thank you. And members, thank you all for your participation. See you next week with a new program and with a new subject. Thank you.